The truth about closing costs that no one breaks down.
They told you about the down payment, but what about all the other fees?
All right, good people. I am here today with Ethan from Fairway Mortgage, one of my lender partners. As always, I'm Chantel, your new favorite realtor, and we want to speak to our buyers and kind of help answer any of those burning questions that you have. So, Ethan here is going to assist us with that, and let's see how it goes.
Absolutely. I'm super happy to be here, Chantel. Thank you for your time. Thank you, everybody, for watching. Let's get right into it.
All right, Mr. Ethan. So, one of the top burning questions that we get is, does getting pre qualified affect their credit score?
That's such a good question, Chantel. So, in general, yes, if you are going to be applying for a mortgage and applying to be pre qualified with a loan officer, part of that process is a credit check, a credit pull. Now, it will depend on who you're speaking to, if they're going to do a soft credit pull or a hard credit pull. But if you reach the point where you want to actually be pre qualified and have that letter in hand so you can go with Chantel and find your property, you will reach a point where you will need to do a hard credit pull so that the loan officer can have your liabilities on file and start running your numbers that way for the pre-qual.
Now, say if I'm just kind of shopping around, not sure if I want to step in, is it better to get a pre approval or get pre qualified?
So that's going to depend on your preference as a buyer, because in general, a pre-approval is a lot more strong and solid than a pre-qualification, because a pre-qualification is step one. That's where a loan officer pulls your credit, potentially looks at your income documents and says, hey, buyer, you are qualified to buy a property for X amount of money. But that at that point, you just have the loan officer's word, essentially. A pre-approval is another level up above that, because the loan officer will take your documentation and then submit your paperwork to underwriting before you're even under contract for a home, to give you that full pre-approval where your income and credit has been reviewed and you're just waiting to actually find the property of your choice.
Okay, now I have a follow up question with that.
Yes.
So, in getting a pre approval, can I still shop around and it not hit my credit as hard?
Not necessarily, because
Okay.
remember, if you're at a pre-approval stage, your credit has already been reviewed by an underwriter, right? So by that point, your credit has already been pulled. And so that report is usually good for 4 months, so you can shop around. But by that point, the credit has already been pulled. And if there is any effect on your score, it will have already happened by that point. Versus if you're in the pre-qualification stage, potentially, and I, as a loan officer, I send my pre-quals once I have a credit check as well, because think of it this way: if you're going to be going out there and looking for your home, right? If you don't have your numbers actually reviewed correctly up front, when you go out there and put money on the line, if something goes wrong with your loan and you're not approved at the end of the day, you as the buyer are the one losing that money. So that's what we want to avoid by essentially doing the work up front, right?
Great. That is a great answer. There are so many people that want to go look for houses but not really know the numbers. And so I think that really helps them kind of understand the difference between pre qualify and pre approval, but also being prepared and ready to take that step.
For sure.
Another big question we get are, what are the loan programs that someone is eligible for? So a lot of the time people see first time homeowners, zero down, or discount points, and they just don't know what programs they qualify for. So how can we figure that out?
For sure. So there's a lot of loan programs out there. There's a lot of terminology. In general, as a buyer, you need to understand that at the end of the day, whichever loan program you choose, you want to ideally work for your situation and your numbers, but they all serve the same purpose, right? You're obtaining financing to secure your collateral, being the home. So you have your traditional financing types, you've got your conventional, your FHA, your USDA, and your VA. Those loan programs have different requirements, right? For example, a USDA loan is 0% down, but has a requirement of purchasing a home in a rural area, right?
Okay.
That's going to be different from your FHA loan that's a 3.5% down minimum, but you can use that wherever. It doesn't have to be a rural property. So it's important to understand that there's different loan programs out there. You mentioned discount points, right? Discount points is a term that's used when in relation to interest rates, because that is an optional buy down charge that you as a buyer can pay at closing if you want to buy down your rate with discount points, but it's optional. And it's very important that when you're talking to lenders and loan officers that you ask, when you see your numbers, ask for a fee sheet, ask for a loan estimate, and check to see if there are discount points being charged for the rate that you're being offered, right? So I know that's a lot, but I put it that way because you as a buyer, you're not necessarily going to know all the ins and outs of every program. That's our responsibility as loan officers to educate. But just know there's different parameters, and you should share what you're looking for in your situation with the professional you're speaking with so they can find something for you.
Yes, that is good. So a lot of people I know are hesitant to want to talk to lenders, but as you see, Ethan knows his stuff and he has the outline for all of these programs that will really help you and see what's going to be best fit for you and your budget. So another good one is, what interest rates can I qualify for?
Great
So we
question.
see all the time interest rates are going up, they're not, or
Mhm.
they're dropping by 1 point. And so if my credit score is higher,
Mhm.
do I qualify for a better interest rate?
Yes, yes. In general, that is the way that it's worked, right? So the higher your credit score, the higher your down payment, the lower the interest rate you're more than likely going to be able to secure. Interest rates are a range, and it's going to depend on which loan program you're using and the parameters. Like I just said, your credit score and your down payment. All of that information, once you've applied, is put into the automated underwriting system. The system runs the numbers, approves you or denies, tells us how you're doing, and we check pricing, right? We need to check it daily because rates change every single day, and there's different investors out there. So there's
Mhm.
a lot of possible interest rates for every borrower, and your situation is going to be specifically tailored to your numbers. That's why I just mentioned that when you reach that point, that's when you start digging in to find out, hey, are there discount points involved with this rate that I'm being offered?
Mhm.
Because you may have just an example number, you may have a loan estimate with a 7% interest rate on there fixed with zero discount points. But you may also have a 6.25 that includes one discount point, which is 1% of the loan amount. So if you're financing 200,000, for example, that would be a $2,000 discount point extra charge added to your closing cost for that 6.25 rate versus going with the 7% and not paying anything extra. So all those numbers need to be balanced properly with your situation, because you may walk away saying, hey, I need that monthly payment to be rock bottom as low as possible, and I'm willing to pay more at closing to get my rate there. If that's your situation, you can do that. Or you may say, hey, I got to save every dollar possible at closing. I'll take the higher rate and I can afford that 50, 60, $70 more per month, right? So it
Right.
just depends on your situation.
Okay, that is perfect to know. So with that too, how much do I need to for a down payment?
Depends on the program, right? So USDA, 0% down. You just have to cover closing costs. That program is pretty restrictive though on the debt to income ratio requirement being 41% max, meaning that if you want to go with a 0% down program, we're going to need to run your numbers to make sure your debts, monthly debts, including the mortgage, are less
Hmm.
than 41% of that income. Um, but other, you had asked about down payment, right?
Yes.
So FHA loans, extremely flexible, minimum 3.5% down. Like I said, there's no rural requirement for your home, so you can buy in the city, you can buy wherever you want with an FHA loan. Conventional loans will run you usually at 5% down, but there is a home ready or a home possible program that you would have to qualify as well. That's 3% down. And then finally, we have VA loans as well for veterans or active duty. That is also 0% down. So it's really going to depend on which program you choose and what you're looking for, right?
Okay, that is great to know. So basically looking between your interest rate and what you qualify for and how much you need for down payment, we really need to kind of, one, make sure we're saving, two, kind of working on our credit. But the biggest thing I've taken from now is that we need to have that consult with you
Mhm.
just to kind of go over everything and see where we stand
For
in
sure.
general.
For sure. Because every person's situation is different. Everybody's numbers are different and their goals are different,
Yep.
right?
Yeah.
Yeah.
So this is why I also encourage you to call me so we can sit down and have that goal conversation. Because not just in what you want in a home does your goal matter, it matters with your numbers too.
That's right.
All right. So, what is all included in a monthly mortgage payment? So, a lot of people think, oh, I'm going to get this house and my payment is going to be, say, $1,000. But they don't realize there's additional things and what's all in that number.
Yes, it's broken down. Your monthly payment, it's not like rent, right? When you pay
Mm-hmm.
rent, you pay one amount and it goes to the landlord. It with a mortgage payment, it doesn't work that way. You make your mortgage payment in total to your mortgage servicer, but your mortgage servicer then divides that payment to different places, right? You have your principal, your interest, your taxes, and your insurance. Those are going to be your basics. And you can also have association fees. If you purchase a property with an HOA,
Mm-hmm.
that's going to be included in that monthly payment as well. So all of that is included, and then your payments. I'm just going to carry on a little bit to talk about escrow accounts
Yep.
because once you start making those monthly payments, whatever that portion that goes to insurance or taxes may be, right?
Mm-hmm.
It's going to go to your escrow account, which is managed by your mortgage servicer. And sometimes I've gotten the question, what is escrow? It's essentially a reserve account where when you, let's say your monthly payment's $1,000 and $200 of that is going to go towards taxes and 100 towards insurance, just an example.
Mm-hmm.
Every month when you're making that payment, that 200 will go to your escrow account for tax and the 100 for insurance monthly, and it repeats until your bills become due each year. When your tax bill is due, your mortgage servicer will take the funds from that escrow account and pay the taxes. When your insurance is due, they'll do the same with the insurance. So that's where your money's going to be going, right? It goes to various places: principal, interest, taxes, insurance, and association fees.
Yeah, and so it's always good too to kind of weigh out those options in whether you're paying your taxes yourself or having your mortgage company to do it. I always advocate for the mortgage company to do it because it gives you peace of mind. You know it's done every year and you don't have to worry about it
Right.
being late as well. And that money is automatically being set aside for you.
Mm-hmm.
All right. So, one of my final questions for you, and we kind of briefly touched on it, but what are my closing costs? And then can my closing costs be negotiated?
Great question. So closing costs are going to comprise of various different costs. At your basics, you're going to have origination or processing fees
Mm-hmm.
from whichever mortgage company you're working with. You're going to have appraisal fees, escrow fees, prepaid interest is included as well, attorney fees, title fees, and any sort of rush fees would also be included, as well as a home inspection. If you have it done prior to closing and you pay for it prior to closing,
Mm-hmm.
it will go on there as paid prior to, but you can also pay for it at closing if you'd like. So closing costs are going to include a wide range of necessary charges, essentially, and some of them can be negotiated,
Okay.
right? Not all of them. There are your required borrower investments that are necessary, like that origination charge. Um, but there are optional charges like the discount points for the interest rate or any fees that may come up during the real estate process, any sort of inspections that you do. Obviously, that those can be negotiated with your professional if it's going to be covered by you as the buyer or by the seller. But all of those charges are broken down for you, just so you know as a buyer. You're going to see them on paper before you
Yes.
close, right? It's
Yes.
not like you're going to reach your day where you're going to get your key from Chantel and find out you got to pay an arm and a leg for all these things.
Mhm.
No. By law, it's written into law that those disclosures need to be sent to you well in advance with a loan estimate. Once you are actually disclosed a loan package, and then again with a initial and final closing disclosure once your loan has been approved and you're getting closer to closing. So everything will be itemized out so it can be reviewed, and essentially they're going to be required charges only. But make sure you review it all on your actual documentation before you close, obviously.
Thank you
Yeah,
so
of
much.
course.
That was a great answer. So, you guys, I know that this video was long. It had a lot of impactful information. Feel free to reach out to myself or Ethan if this has spurred additional questions or you would like us to take a look at your goals and review things with you personally. We are always here to help you in achieving that goal of home ownership, investment properties, and more. So if you have any questions, feel free to drop them in the comments. Make sure to subscribe, like, and share. And as always, call me, Chantel, your new favorite realtor.
Bye, everyone.